All right, fam, what's going on? This is just a little update real quick on NZD, The reason why I'm updating y'all is because I actually zoomed out, looked at the daily time frame, drew the Fibonacci's, which was from this swing low to this swing high. We had a 38.2, which is a juicy spot right here. I also drew from this swing low to this swing high on the H4 and ended up having the 61.8. So we have 38.2 and 61.8, which are spots of reversal or takeoff. So what we're looking for right now on this NZD is, one, we have a downtrend, okay, coming down right here. We have a lower high, lower low, lower low, right? So price came down, made a new low, went up, made a new high. It was lower than that. Went down, made a new low, which was lower than that. Came up, made a new high, which was lower than that, right? So we have that trend, right? So now all we're doing is, sorry about that. All we're doing right now is waiting for price to get under the 61.8, which I see price doing this, okay? I see price coming down, touching this 50 MA, bouncing back up because the 50 MA will be used as support at first. It'll break up, touch this 61.8, which also has a 38.2 from the daily, and then we'll bounce down, okay? Now this is an extension off of the H4 for at the 127.0, which we would use for take profits. But when you look out on the daily time frame, which I showed you in the beginning, right, we have potential take profits, we have potential take profits all the way down here to 0.630. The only reason why I say that is that's a institutional number that they like. So I see that likely as a target to be hit. We could take partials down in here or up at these extensions as well too. It's going to be totally up to all of you. I'll let you all know. But as far as NZD, this is a textbook setup in my opinion. For price to drop all the way down, we would definitely need price to break this trend right here. So we would have to have something that goes down like this, bounces up, goes up, and then continues all the way down, right? So that's something that we'll be keeping in mind once price gets down here. Remind you, this is the daily, so we're going to be in this trade for quite some time. It's not going to be just a get in and get out trade. I don't want to be doing that because I don't want people having to look at their phone all the time. I want to be getting in position trades where we're holding this long term, move with the big money. And the only reason I definitely do see price going down as well too is because price right now on the daily is below my 50 MA, which is used as support and resistance. Since it's below it, it's used as resistance with that trend line. That's a double confirmation right there of price dropping down. So the USD is weakening, but I mean, when you go into the USD and the DXY, when you're looking at this, price is dropping and it's been dropping. But when you look at this as well too, price has been dropping on here, which means a weak dollar still is overpowering the NZD USD on the daily, right? So that means that the US dollar strengthens, which most likely will happen soon. That's going to even push price even further. So it's just weighing out everything and looking over everything and seeing what we got here. This is NZD USD. So everybody stay patient. I'm not getting into trades anymore just to jump into trades. I'm holding long term. So like I said, what we're looking for is price to break through this zone, that blue zone, touch right here, bounce back up. We're going to be looking to enter in here with stops above these highs, right? Above those highs, those would be stops. I'll put it as red. The reason why I would put stops right there is because if we enter right here in the zone somewhere, we'll just go right here up to there. That's going to only be like 38 pips or 32 pips, depending on where we enter. If we enter right at that pink line, it could be 32 pips, which is only 3% of your account if you're using proper risk management, which everybody knows, 0.01 per 100. So if you have a $500 account, you should only be doing 0.05s, or you could open up a 0.02 and a 0.03 and twin trade. All that matters is that it adds up to whatever the proper risk management is. Do not over leverage your account. We want you compounding profits. We do not want you compounding 10, 20% losses. I'd rather you take a 2 to 3% loss and compound those versus 10 to 15% losses. So just keep in mind risk management. We're in this long term. We're in the Forex markets long term. So please do not have a get rich quick type of mindset. We have an opportunity to make money with the comp plan. So utilize that and take your time with these charts. If not, the charts will humble you, and you don't want to be humbled by the charts because you're not going to like it. So just take your time with this. This is our markup. Clearly prices between the 10 and 50, the 10 and 20 are the MAs. This is showing a sign of reversal, which is another signal to potentially be getting into. So let's just wait and see what price does. This could develop today. It could develop tomorrow. It could develop next week. If the signal's not given out, I'm not too worried about it because I'm waiting for it in this setup because this is a textbook setup, in my opinion.